All the links you need to join my chat or take action on the course or the mentorship are here. Otherwise, click that Twitter link to private message me. How's it going, YouTube? It's Louis Crypto here. I'm back with another quant update for you all. So with this head and shoulders that we've been talking about for weeks now, we believe that the pattern's target will be met on the loss of this green area. So this is like the final layer of defense. This is the bull's support. So as long as we're maintaining it, in actual fact, we shouldn't see lower prices. We should go up from this price point of $94 to $100. There are also some key levels of support higher as over here, but I'm looking over here for now because we're still within this current range between 106 and 115. When we came down to 106, we formed this double bottom over the weekend, which I gave you guys, well, last week, which I gave you guys, and I think we met the target over the weekend. So the target was above the double bottom, sorry, the head and shoulders neckline, basically invalidating the downward target, and so suggesting that we should actually now go up from here. We saw the direct next day actually confirming its support. So confirming the horizontal support, it was previous resistance here, now returned, confirmed the support, confirmed the 20th support, as well as the head and shoulders neckline, and then the direct next day returning back to the double bottom neckline. So it might have been a surprise for you, but if you remember, even before we actually met the target, I was telling you guys, we can meet the target, but because we're in a downtrend since up here, even if you do meet the target, we will eventually reverse and start to head back down lower, in which we've done so. So yes, it was very exciting at the time that we had potentially invalidated it by closing 2 daily candles above this. But we now needed to go ahead and break that high, and we can see that we broke the low over here. So we need to break that high wick there, which was $119, and then we would have tried to see this continuation. But because we lost the 20, the 115, 114, we returned back down to the neckline of the double bottom, revalidating this pattern's target down to about $78. But again, I'm going to maintain the stance that this $94 to $100 support will not allow us to get down there. I'm now going to zoom in on the lower time frames for you guys. I'm just going to get rid of all this double bottom nonsense now. But you can see you come down to the key areas of support and you have bounce. Maybe I'm going to go ahead and look at Quant USD on Bybit because that will be a little bit neater. There we go. Okay, I'm not sure about that wick. Doesn't matter. We're not looking over there for now. So what I can see, and first of all, what we need to remind ourselves of is the FOMC meeting today. Jerome Powell's going to be talking again. Let's see if he's going to raise interest rates. Probably will. So yeah, let's see what happens with the market. Probably going to dump, isn't it? Especially because we're underneath the key resistances, the head and shoulders neckline signaling for Noah. But understand that $100 is going to keep us potentially bullish. This is the last layer of defense until we have to go ahead and believe that the pattern's target down to about $77 to $82 will be met, guys. So yeah, until the loss of 100, we still got a chance of just going up. We're just like right now, it could just be coming down to 100 to then bounce back up. But yeah, on the loss of 100, we're going to go down to those price targets. Now over here, I'm using some Fibonacci's from 106 to 118. This pump that we saw with this double bottom pattern over here. And we can see that it's already started to come back down. We were holding these key moving averages, the 20 and the 55, holding up this uptrend. But you can see that we had a nasty wick over there to the top. So let's actually dissect these candles. So we had a bullish candlestick, a reversal one, because as we were coming down, we reversed. But from this point, we were starting this downtrend. So even with this bullish candlestick pattern, it only worked in the short term. This is what I was trying to tell you with the larger double bottom on the daily time frame. Because of the trend that it's in, these bullish patterns and these bullish candlestick patterns, they may not go up simply because of the trend. If you want me to teach you this step by step, I've got a course and a mentorship, which is one-to-one lessons, video calls. You can check out all the discounts that I have currently that are going to last for the rest of the week. So go check out this link over here, course and mentorship, or private message me on my Twitter. Now heading back over to Quant right now, after this failure over here, so as we can see, bullish pattern worked in the short term, but then it invalidated it also. It's a big green candle, guys. But what is the 200 EMA saying? It's saying that we're below it. So this is actually saying that we should be looking for shorts, guys. So although we had this double bottom on the daily time frame, and we met the pattern's target by breaking above the neckline, it was from there to there. And then we can see that the pattern's target was met. So after meeting the pattern's target, when we scale down to the 4 hour, we can see that when we met the target, it was pretty much in line with this 200 EMA. we did have a go at breaking above it. We did close above. So now let's see some consistency, just as we did with the daily time frame and the head and shoulders neckline over here. Let me just draw it because this is again a fresh chart. So remember this head and shoulders neckline over here. Well, with this, yeah, you can manipulate it so it doesn't look like it reclaimed it. But the one that we had on the Binance chart, we can see that it closed above, and the red one confirmed its support just like that there. And so it looked like it invalidated the bearish pattern, but you can clearly see that we came back underneath. This was tying up with that 200 EMA. So because we were above it, looking to start an uptrend, because while you're above this, we're in an uptrend, but we can see multiple fake outs over here. So there was reasonings for why this ended up being a fake out, because we had a bullish pattern in a bearish trend. So these will either not work at all or in the short term. And that could be meaning that it's going to meet the target. But once the target is met, what was the original trend? It was down. So this bullish pattern was just temporary. So when we head over to the 4-hour time frame, we can clearly see that, guys. I hope this video has been very informative for you guys today. So make sure you do bump up the algorithm for me, as YouTube's all about engagement. So if you could subscribe, like, comment and share the video updates. Also turn on the notification bells and follow me on my other socials, and you can find all of the information you need. Whether you want to take action, head over to my Twitter. It's all in the pinned comment section below this video, or in the top right corner over here somewhere. Now we can see after placing the fibs, going down to the 4-hour time frame, although we lost the key moving averages and we are under the 200 signaling for downtrend continuation, we can see after the rejection we lost the 2 bullish EMAs because we were above them. So the bounces only worked in the short term, as we just covered previously, and then we can see that was all invalidated and we went ahead and lost the key moving averages. However, you came to quite strong levels of support here, being the golden pocket between the 0.5 fib and the 618. So go ahead and draw this. I tend to draw this gold box because when I first started, this is what helped me. So that's why I do it for you guys. Again, I can just go off just the lines, but if you're new to these, I would suggest drawing a box between the 618 and the 0.5 fib, because you know, okay, after such a rally up, we need to start coming back down. And the fibs are going to tell you where you're going to come down to. And these are the most retraceable levels. So if we were to come down into here, it doesn't necessarily mean just instantly buy and expect continuation. No, this is not the case. It just means that that's what should happen, correct? We know, just as here, when you get above the 200, you should go in an uptrend. And then was that the case? We were above the 200. Did it go in an uptrend? No. So here is proof that nothing is 100%. So there's rules, but there's also criteria for those rules. So the rules of the fibs is that you measure a wave up to tell you where we're retracing back down to, in which we come back to the golden pocket. If you're not be able to follow this along, I spent over 40 minutes to an hour on three or more videos specifically on the Fibonacci's in my course. So you will be able to master it if you are taking action on that, or of course the one-to-one mentorship, as that's designed for whatever your struggle is. But this is meant to hold a support, right? And then what should follow is a wave up like this. But we know there's more to it than just the Fibonacci rules. We know what trend we're in. We also know, like from the top over here, we've been going down. We've also broken down out of a bearish pattern, and we had a throwback or a fake out where we reclaimed it and instantly came back down very nicely in line with the 200 EMA, actually saying if you come up to here, you should be looking for shorts. And now we're below the EMAs here. It's essentially saying we should be looking for shorts. But what is happening here in the golden pocket? We're actually seeing a double bottom pattern formation. And so with a break above the 382 fib on the 4-hour time frame at about $114, price should go up to its target. I would just use the $115 level, psychological level. It's also the 236 fib. I will just get you the target regardless of this double bottom over here, double bottom ascending triangle. So over here we've got our target. Let's use the conservative, simply because we're in a larger downtrend, and you can see it's calling for about the 236 fib. But please understand, guys, pardon me, please understand, guys, the fibs are saying we should do something like this, but there was more to it. Remember the head and shoulders neckline, and that might not allow us at all whatsoever to go up there. In actual fact, I'm going to place this. Remember, this is a fresh Bybit chart, just because I wanted to see the lower time frames a little less messy. So this neckline over here might be a little bit different on this chart. That's what I'm trying to get at, guys. So on my other chart, I had these two, this green and this red candle actually above the yellow line. So I'm going to do the same thing on this Bybit chart. And as we scale back over to the 4-hour time frame, we can see where the neckline of this head and shoulders sitting. Look at those exact resistance touches. Incredible. If you're struggling to draw these, again, I've got all the things in place for you to become a self-sufficient trader, guys. Again, you don't need any prior knowledge. I've had some students in the last weeks saying, you know, I'm not the best at English. Guys, even if you're not the best at English, it's fine, honestly, because I try to dumb it down as simple as possible to make myself understand it, and so in turn that should make you understand it. So yeah, you know what to do. But this neckline over here will act somewhat of a resistance. So even if we have this short-term double bottom over here, we were saying maybe just come to the 236 and then get rejected and continue with your trend. Because again, guys, the fibs are saying we should do somewhat of a move like this, but we know it might not be the reality because of what's actually going on in the market, like what the patterns prior to this, the invalidation of the bearish pattern where we were confirming it as resistance, we invalidated it, we revalidated it, confirming it as resistance with that big red wick. So it's just proving that this is a resistance. So any pump towards it, I'm going to expect a dump from. Of course, the golden pocket is suggesting a move like this, but with what's going on, as I've just mentioned, as well as the fundamental news events happening today with Jerome Powell speaking, potentially probably will bump up the rates, but that would lead essentially to the loss of this and then creating the reversal wave where we would be looking at a 109 and a 106 target for Quant on the loss of these two levels. So pretty much if this is to be cleared, then we're looking at returning back down to our psychological support, which we've been talking about on the channel for God knows how long. In actual fact, guys, I know that a lot of you don't want to hear it, the haters especially, but I spoke about this whole thing back over here in November, and the amount of hate I got was hilarious. I said this was pretty much going to play out as a head and shoulders. Not one person wanted to hear it. And here we go, 6 months later, it's finally coming to fruition. So that's what I told you back then as well. I'm looking out for you guys well into the future. Things that I say on the channel could take even a year plus to actually come to fruition, but I'm looking out for your best interests, unlike unfortunately most of the YouTubers here. That's why I just want to bring it down to reality. I just want the end goal just as much as you guys, probably even more. But why would I fool myself and then fool you guys as well? There's simply no point. So that's why in my videos I will look at both directions. Why would I only think it's going up? No, we need to look at it both ways and not really have a bias. I say that, but I do look at both directions, and then once one is valid, we react to that. And then we take what it's essentially done, rather than just say, oh, you know, Quant is going to 10k, guys. You know, if you own 50 Quant, you're going to be a millionaire, and all this garbage, rubbish, absolute rubbish. So I'm not like that. We're just legit on the channel over here. We're just trying to spread awareness that, you know, we should be looking at both bulls and bearish case. And so that's why, if you've been following along for long enough, you'll see that, it's the best way to go about things. We're always prepared for any scenario. So for the moment, what we're anticipating is potentially a double bottom pump back into this resistance. It might not happen whatsoever, and we're just waiting to see if this golden pocket will be lost for the reversal wave to be created, where we're expecting a 106 to 109 target to be met on the loss of the golden pocket, which is $111. And so on the loss of the 1 fib level, if it were to be the case, then we've got the 1 targets down here acting as confluence with some levels of support, which we've been talking about on the channel for some weeks now, which is this $95 to $100 area over here. And as we scale back to my other Quant chart, if we can if I can find it, this one right over here, we can see that specific target itself, if we just measured the fibs again, It might be a bit different on this chart because it's a different chart now. I know that the levels are the same, but we can see the targets over here acting as confluence. So that's pretty much it for today's update. I'm going to leave it there for you guys. But if you want to take action on my course or even become a member, because in the last day, you're going to love this, guys. In the last day, I placed a buy in my chat, no leverage, and we all did 200% gains on this coin. There was another coin we did 90% gains on, all in the last day. The meme coins are going crazy at the moment, so we have been taking action on them. And yeah, and if you want to be part of any of that, click the membership level. Again, guys, the first membership level to join my community will be this one over here. But yeah, check them all out. Otherwise, my discounts at the moment fall under the booking section, whether you want a discount on the course or my one-to-one mentorship, which I'll throw in the course completely for free. You can take action here. You will also get 3 months in my Discord group chat for free, and then after those 3 months, all students, past students, get the chat at a 50% discount for the until I don't have a chat anymore. So for life, essentially. Thank you, guys.